Today's guest has spent over 20 years at the intersection of finance strategy and IT services, Mr. Ravindra Nagarkatti.
Getting pricing right in complex IT services deals is about balancing competitiveness.
So, what does the finance function's role in a JV actually looks like from inception to exit?
One keynote I want to share, and that is credibility in the boardroom is earned by consistently bringing clarity and insight.
Hello, everyone, and welcome to FaceTime with Leaders, powered by Directors Institute, World Council of Directors. I'm your host, Sari Pancholi. Today's episode is for anyone who wants to understand what strategic finance leadership truly looks like. Not just managing numbers, but driving M&A deals, building joint ventures, pricing multi-million-dollar contracts, and transforming how entire organizations see and use their financial intelligence. Today's guest has spent over 20 years at the intersection of finance strategy and IT services. He represented finance in two landmark M&A deals, a $200 million sell side for SLK Global and a $600 million sell side for SLK Software. He built the FP&A function from scratch for $200 million plus revenue group, led a 2,000 employee joint venture from inception to exit, and has transitioned finance functions across Germany, Netherlands, Australia, and beyond. He holds an MBA from NIMS and an M&A certification from the New York Institute of Finance. Please welcome Mr. Ravindra Nagarkatti. Mr. Ravindra, wonderful to have you here.
Sunny, thank you very much. Thank you for the warm welcome. It's truly a pleasure to be here and to share my journey. When I reflect on my career, it's about building depth across full spectrum of finance, right from my early days in statutory audit, working in global finance environment, to the present day in FP&A, pricing, business transformation, coupled with M&A and joint venture governance, which expanded my perspective significantly. These experiences helped me transition from being a finance associate to strategic business partner. Over the years, what has stayed constant is my belief that finance is not just about reporting numbers, it's about enabling decisions, protecting value, and build trust with the stakeholders. I'm really looking forward to this conversation and sharing some of those insights.
Absolutely. So, what are we waiting for? Let's dive right in. Mr. Ravindra, your career began as an article clerk at a chartered accountancy firm, moved through Accenture, Logica, Tesco, and has seen you spend over 12 years building the finance function at SLK Software. Now, that progression from statutory audits to leading $600 million M&A transactions is remarkable. What were the defining moments that shaped you into the strategic finance leader you are today?
I would like to break my journey into two phases. First, being my CA articleship with statutory audits. It helped me in building a strong financial discipline, professional ethics, and attention to detail. At Accenture and Logica, working on global finance and accounting transitions across Europe and Australia gave me an international perspective earlier on. That's when I realized that it's not about control, it's about strategic enabler. Second phase is the turning point at SLK. Joining in 2012, I built the FP&A function from scratch, transitioning from finance operations to true business partnering. Leading large teams at Logica and Tesco helped me build the leadership muscle for complex stakeholder environments at SLK. A key moment was when finance started partnering in driving decisions and growth and pricing, and not just reporting numbers. The overall outcome across 20 years in audit, finance operations, FP&A, and M&A, I built a holistic 360-degree finance perspective, strengthened by my academic qualifications, that is MBA, specialization in applied finance, leadership and strategy from NMIMS, strategic management certification from IIM Kashipur, and mergers and acquisition certifications from the New York Institute of Finance gave me a clear strategic frameworks. One keynote I want to share, and that is credibility in the boardroom is earned by consistently bringing clarity and insight to business decisions.
Absolutely, Mr. Ravindra. From statutory audits to $600 million M&A sell-side representation, that arc tells us everything about what deliberate, patient career building looks like. And the international finance transition experience, Germany, Australia, Netherlands, gave you a global financial lens that most India-based finance leaders simply don't have. So, Mr. Ravindra, tell me, you represented finance in two major sell-side M&A transactions, a $200 million deal for SLK Global and a $600 million deal for SLK Software, independently interacting with due diligence auditors and investment bankers on both. Most financial professionals never see one deal of that magnitude. So, what does representing finance in a major M&A transaction actually demand? And what did those experiences teach you about governance under the highest pressure?
Representing finance in a major M&A transaction demands absolute precision, control, and the confidence to defend numbers under scrutiny. It's not just about preparing the information memorandum or supporting the due diligence. It's about ensuring consistency, credibility, and governance across every financial narrative. In both the M&A transactions, I worked with the due diligence auditors and investment bankers, which required strong technical depth and the ability to stand firm on the financial operations and positions. One key learning is that preparation and clean financial governance determine how smoothly due diligence progresses and ultimately how value is perceived. A critical factor was the groundwork we had done at SLK in strengthening internal controls, financial systems, multi entity, multi dimensional reporting that made the process faster, more transparent, and built strong buyer confidence. What M&A really taught me is that finance is not just about reporting historical numbers, but it's shaping valuation, managing risk, and value in real time.
Rightly said, Mr. Ravindra. Independently interacting with investment bankers and due diligence auditors on two deals worth $800 million combined. That is not a supporting role. That is frontline financial leadership under real scrutiny. And the point about internal financial controls making due diligence faster and more credible is something every board preparing for M&A needs to hear well before the process begins. So, talking about JV, Mr. Ravindra, you were an integral part of converting an existing customer relation into a joint venture, from business plan creation through establishment and eventually exit of a 2000 plus employee JV with a Fortune 500 company. A JV of that scale is one of the most complex financial and governance undertakings in business. So, what does the finance function's role in a JV actually looks like from inception to exit?
So the finance function in a JV plays a role across the entire life cycle, from value creation to value protection, and finally, value realization at the exit. At inception, finance is central to business planning, financial modeling, valuation, and structuring. Converting a customer relationship into a joint venture requires a shift from vendor pricing to shared value creation and risk sharing, which directly shapes the governance and commercial framework. During operations, finance becomes the backbone of governance. In a company consisting of 2000 plus employees, joint venture with a Fortune 500 partner, finance operations, business finance, MIS reporting are not just integral tools or internal tools, they are contractual obligations. It comprises of financial accounting, statutory compliances, absolute transparency, disciplined reporting, and the ability to manage stakeholders through data driven decisions and discussions. At the exit, finance ensures smooth transition, clean books, clear ownership, and well documented controls which makes it seamless exits. My takeaway here on this particular JV is that in a JV, governance is not just about an outcome, it's designed at inception. If the financial structure and controls are right from day one, both operations and the exit become significantly smoother.
So, from business plan creation to a clean JV exit with a Fortune 500 partner, that is the complete financial life cycle of one of the most complex corporate structures in existence. And the insight that governance structures built at inception determine how smooth the exit is. That is something every board entering a JV needs to write down before they sign anything. Great.
So,
What an
agreed.
insightful conversation we are having. Let's move forward with my next question. But before we do that, let's take a quick break. Okay, so Mr. Ravindra, tell me, you have led pricing strategy for large IT services deals, fixed price T&M, and managed services across RFPs and bids, ensuring healthy margins across on-site and offshore locations. Now, pricing in IT services is one of the most strategically consequential and least visible finance functions in the industry. So, what does getting pricing right in complex multi-year IT deals actually require? That is part A of my question. Part B, what are the governance disciplines that protects margins over the life of a contract?
So I'll answer the part A of the question now. Getting pricing right in complex IT services deals is about balancing competitiveness with risk-adjusted profitability. Each model, be it a fixed price, time and material, managed services, each of these are accompanied with different risks and margin dynamics. The foundation in a robust pricing mechanism includes proper scoping of work, pricing of the tools and the efforts that are required, along with the additional aspects like multi-year, multi-geographies, multi-currencies. Pricing models should cover both profitability and cash flow projections, which are extremely important. One key learning is that what we do not model upfront, whether it's effort assumptions, offshore mix or on-site mix, or change requests, comes back on risk later on. Also, pricing does not end at deal closures. Protecting margins requires continuous governance, strong validation of commercial terms in the agreements, and monitoring ongoing revenue recognition, costs, margins through MIS reporting on a constant basis with regular periodicity. In today's world, technology plays a pivotal role. I have built a robust reporting tool on Power BI to bring in real-time visibility to project level profitability, enabling the management to a faster and more accurate informed decisions. In pricing for IT services, it's not just about winning deals, it's about building governance mechanisms that protect margins throughout the contract lifecycle.
Absolutely, Mr. Ravindra. A self-built reporting tool using Power BI that delivered real-time margin intelligence. That is such a sharp example of financial leadership creating governance infrastructure rather than just consuming it. And the point about margin governance being an ongoing contract-like responsibility, not just a bid-time exercise, is is something every IT service CFO needs to be telling to their boards.
Yes,
Great.
absolutely. I agree on that.
Superb, superb. All right. So I invite you to the next round of questions, which we call as quick fire round. And I know you play chess, cricket, and listen to Hindustani classical music. So these are going to be appropriately thoughtful. So are you ready for it?
Yes, yes, absolutely ready.
All right. So here I shoot you with the first question of quick fire round. Tell me a perfect financial model with flawed assumptions or a simple model with rock solid data, which is more dangerous?
Okay. I believe I would go with a perfect model with flawed assumptions because you see, precision is good, but precision with wrong foundation is dangerous, extremely dangerous.
Absolutely spot on. Next one, FP&A or M&A, which teaches you more about a business?
I think FP&A, I would go with FP&A throughout. because it teaches you how the business actually runs on a day-to-day basis.
Okay. Next one, the best finance leaders are born analytical or trained strategic?
I think they're more trained strategic because analytics is a base, strategy is built through experience.
Rightly said. Tell me, AI in financial planning and analysis, is it a genuine game changer or overhyped?
Oh, I believe it's a genuine game changer because only if it is backed by strong data discipline, then it's definitely a game changer.
Absolutely. Next one, numbers or narrative? What actually wins in a boardroom presentation?
Oh, I believe the directors definitely look for a narrative because numbers are already informed on the screen, but stories is what persuades the board members.
Absolutely, Mr. Ravindra. I loved every answer of yours,
Thank
and that
you.
was very quick. Okay, so Mr. Ravindra, next segment is leading with precision, governance, resilience, and the finance leader of tomorrow. Now, let me ask you, finance leadership in IT services means operating under constant pressure, deal deadlines, due diligence, scrutiny, margin targets, stakeholder expectations, and the relentless pace of business change. Now, you have navigated M&A transactions, JV governance, ERP implementation, and multi-country finance transitions simultaneously. So, when a genuine financial crisis or governance challenge hits, what does your leadership actually look like in that moment?
Okay, pretty tough question here though. In a financial crisis, leadership starts with clarity and control. My focus has been on three things simultaneously. One is on accurate financial assessment, transparent, stakeholder communication, and strong governance documentation. Because I've seen this during high pressure situations like be it ERP implementation, deal deadlines, aligning business with strict margin targets, and due diligence challenges. What made the difference was that reacting. Sorry, start all over again.
Sure.
So that's a very tricky question. In a financial crisis, leadership starts with clarity and control. My focus has been on three things simultaneously. The first one being accurate financial assessment, second being the transparent stakeholder communication, and third and last is the strong governance documentation. I've seen uh, I've seen this during my high pressure situations in ERP implementation, deal deadlines, aligning business and with strict margin targets and due diligence challenges. What made the difference was not reactive action, but a proactive approach with the strength to with the strength of existing controls, MIS, and variance frameworks. They ensured issues were contained and not getting escalated. Beyond crisis response, resilience is built upfront through disciplined FP&A, real-time dashboards, and structured implementation like rolling out ERP, Oracle ERP in tight timelines was a key requirement. We created systems where risks are visible earlier on and decisions are always data driven. Ultimately, finance leadership is about trust. When board trusts your numbers, they trust your strategy, right? So, finance leaders' responsibility is not just about reporting numbers, but Sunny, it's to ensure they are accurate, transparent, dependable, especially when it really matters the most.
Absolutely. Being the person the board trusts with the numbers, that is such a powerful way to frame the finance leader's ultimate responsibility. Because the moment the board stops trusting the numbers, they stop trusting the strategy, of course. And everything you have described today, the governance discipline, the modeling rigor, and the M&A transparency, is essentially about earning and keeping that trust alive. Great. So before we wrap up, Mr. Ravindra, let me ask you, you are a valued member of Directors Institute Board Council of Directors. From your personal experience, what has been part of the Directors Institute went to you. And how has that governance and boardroom perspective shaped the way you think about finance leadership?
Sure. So being part of Directors Institute has brought in a paradigm shift from operational finance to a boardroom thinking. It exposed me to governance frameworks across industry perspective and the level of accountability expected at a board level. One key realization was that board members don't just review numbers; they rely completely on on them to make long-term strategic decisions, which raised my own standards and clarity, transparency, and context in financial reporting. I've applied these insights directly in areas like M&A, joint venture governance, and FP&A across, uh, across ensuring the financial narratives are not just accurate, but aligned to strategic outcomes and risk governance. It has also shaped my leadership style, bringing more strategy, ethical discipline, and long term thinking into growth and decision making. Governance education gives finance leaders the language and the perspective to move from presenting numbers to influencing board level decisions, is what I believe.
Absolutely, absolutely, Mr. Ravindra. That's a really meaningful reflection, not just as a finance expert and M&A practitioner, but as someone who has continued to sharpen perspective through governance, responsibility, and long-term thinking. And for a finance leader who sits at the interface between business performance and board accountability, that governance awareness is what makes the numbers tell the right story. So let me tell you, Mr. Ravindra, this has been a genuinely precise and illuminating conversation. Thank you so much for your precision, your honesty, and for 20 years of making finance matter beyond the spreadsheets.
Sunny, thank you very much. Thank you for having me. It has been a wonderful conversation. I've enjoyed sharing my journey as well. And I believe finance leadership ultimately comes down to building trust and enabling better decisions for growth. I truly appreciate this opportunity and thank you very much.
Thank you once again, Mr. Ravindra. To our listeners, whether you are a CFO, a finance professional, a business leader, a board director, or simply someone trying to understand what great financial governance looks like in practice, today's message is this: finance leadership at its best is not about managing numbers. It is about governing decisions, ensuring that every strategic move, every deal, every JV, and every pricing commitment is built on rigorous, transparent, and accountable financial foundations. And Mr. Ravindra Nagarkatti has shown us exactly what that looks like. This has been FaceTime with Leaders, powered by Directors Institute, the World Council of Directors. I'm your host, Sunny Pancholi, signing off for now. Until next time, stay curious, stay informed, and most importantly, stay ahead. Thank you so much.